Right. Feroze, very good morning. Great to speak with you on NDTV Profit. It's looking like a morning of conflicting cues, looking like a good day for today. But how would you set up the trade for a day like this?
Samara, good morning. I think, like you said, there has been some degree of range-bound activity on Nifty over the last few days. I personally think more from a 1-2 month standpoint or even long-term standpoint, there is inflows. Like yesterday, if you look at the AMFI data, there is about 16,997 crores of net flows in equity. Largely, there is 6,000 crores out of that going into sectoral indices and about 3,800 crores going into small cap. As long as there's going to be buying pressures on the fund managers and the other institutions on the FII side, you are going to see resistance on the downside. Of course, derivative has a large implication on the short-term moves of the cash market. But if you look at the derivative side, the FII long position is about 68-69% as of yesterday. On the index futures, that I would see as a great lead indicator. Whenever it's crossed about 80% on the one side, there is pressure on the other side. So I think we have still got some headroom in terms of long build up on the FII side and the index long positions. That's point two. Point three, if you look at any other derivative indicator, the best, to my mind, the best derivative indicator is the synthetic premiums on the synthetics, weekly synthetics. That in December ranged between 60-70 rupees. The intrinsic value of a synthetic future on a weekly basis, on a weekly expiry, should be about 18 to 20 rupees. If that goes to 60-70 rupees, that actually is the consolidated bullish opinion of all the traders operating the market. That has cooled off. So that's showing an opposite sign of it. It closed at about 21. The futures, synthetic futures premium over the next Thursday, which is the 18th expiry. So that has cooled off, saying that there is not going to be a huge rally. But I think there is going to be a huge support with the kind of liquidity we have seen from FIIs, which is greater than almost about 62,000 crores last month. I think that FII trend will continue in January as well.
Feroze, hi, it's Amina as well joining in. Feroze, I just want to extend the conversation from today into a little more 3 to 6 or 6 to 9 month kind of timeline. Indian markets have returned or done positive returns for the last 8 years. We are coming out of a very solid 2023. I would imagine either it's time for a time correction or a price correction. Price correction may or may not happen, but do you think a prolonged period of time correction cannot be ruled out at this stage?
So, I would doubt that. Good morning. It's so nice to speak to you again. But having said which, if you look at consecutive years of profits on the capital markets in terms of price, you have to also look at the denominator of the PE ratio, which is earnings. Earnings have gone up from 532 to 777 to 819 to 945 this year. We were expecting, I think it'll close at 965. Next year, we're looking at 1100. If you look at earnings also for 5 consecutive years have gone up more than it's going to be hopefully double in about 5 years. So I think there's no reason why there should be a long drawn process of time correction. Like you said, 6 to 9 months is not too long time from an investor standpoint, but we are sitting on a critical event. And I think that event is going to dictate FII behavior for this calendar year. Because if you analyze the behavior of FIIs on each general election, irrespective of the government, they have been very excited for status quo maintenance. If this government was to continue, the kind of monies on the sidelines which is waiting, I wouldn't be surprised if that's $20 billion to be invested in this year alone after the general election results, if status quo of governance is maintained. So I personally think this is not going to be a very usual year. I don't think it's going to be a lackluster year of sideways movement. It is going to be a R-par kind of a year. And I think largely R, in terms of par, as you say, it will do well. More probability, almost about 95-97% probability for it to do beautifully well, because I think sideways movement is unlikely for this calendar year.
Feroze, it's so exciting to hear such an optimistic take on Indian markets. I think the sentiment is being felt worldwide. I caught up with HSBC yesterday and they seem to be very overweight India, at least in the emerging market pack.
Now, Feroze, I know you can't talk about specific stocks, appreciate that, but just wondering, what would you do with an event risk like this, wherein the deadline is close to getting over in about 11 days. And there is a large global publication which is saying that they hear that a deal like this might be called off. What would you typically do in things like these?
Good morning, Neeraj bhai. What I would do is I would try and see what kind of institutional holding is there. What has been the institutional behavior in the stock over the last 5, 7 trading sessions? Because that's the smarter money. So if I'm a retail investor or even an HNI investor in a stock which is event based, I'm going to try and gauge the probability of that event. Because when things happen otherwise than the probability is when people make a lot of money. If you have to make a lot of money, you cannot place yourself to only higher probability and make money, because if results come out, the stock has already run, for example. So if there is a low probability event of 15-20% transpiring to actually becoming reality, that's when you make those double-digit returns in even 10 days or even 2-3 trading sessions. So point one I would do is I would look at the volume. What is the kind of volume change which is happening? Because the correlation between market, if the stock has been lower over the last few sessions on higher volumes, it's quite likely that institutions are doing. So one is institutional behavior. Now, one is volumes. One is the kind of premiums and discounts. If it's a derivative stock, I would look at the premiums and discounts because a person with a deeper pockets expresses his opinion not by borrowing and selling the stock. He goes shorts the stock. If the premium and the discount on the stock is very different than the 3-month average, that implies what is the smart money thinking. You can't do the kind of research. You can't do the kind of sell-side research. There are several analysts on the street who give advice for free to an institution in spite of not getting paid a salary for it. So if there's institutional brokers giving them free research, I think you will have to try and decipher what's that free research saying. And that comes in the premium and the discount. So these are the 3 things which you would look out to assess the actual probability of an event happening or not happening.
Got it. Well, thanks, Feroze bhai, for that. Feroze, just coming by, and what do you think about something like this, a frenzy like this in small cap names, which might be fundamentally benefiting, but is it in the price for some of these?
I mean, how we look at it is, we look at it as an absolute gain seen as a percentage. See, if there's a market cap of a company which is 50,000 crores, and if a specific event were to happen, the event can also give you an absolute gain and shift in PAT. That might not be a large percentage on a base of 50,000 crores. If the company is 2,000 crores market cap, and if there's an event which happens which gives them a potential valuation change of 1,000 crores, that as a percentage of their 2,000 crore base is 50%. But if the same 1,000 crores benefit in terms of market cap coming to a 50,000 crore company is no more 50%, but it's just 2%. So some certain events are absolute gains when measured as percentages on a smaller base on the market cap of a company can show up a very large value. That's what happens with small caps and these events. See, an event like that for a large cap company might be a very small percentage of market cap movement because some events are absolute change in market value. Because of this kind of an event. So that's one thing which I really look at. Second, I think the kind of free floats which these small caps have in terms of rupee value. See, the free float might be 10% of a small cap company, for example. I'm just hypothetically saying. But the value of that 10% could be as little as 400 crores. If somebody wants to gobble up 200 crores out of that, the kind of price movement you will do on that, because the rupee value of the free float is also an important lead variable in terms of every rupee of infusion in that stock changes the price by how much? How much change in price per unit of rupee becomes higher as you have smaller rupee values of free float. So these are the 2 variables we see which have proved to be a little better predictors.
Interesting.
Feroze, consumption, that was one space that took a backseat yesterday because rural consumption still seems to be a weak spot for some of these FMCG companies. Ahead of the earnings season, what are you expecting? What sort of expectations, rather, are you pricing in at this stage?
So, this quarter might not be that great. But I think the long-term trend, or at least the calendar year trend for a sector like that is beautiful. The kind of government spending we are going to be seeing in the subsequent 5 months of the data, which is supposed to be expected, because we have only penetrated 43% as of 7 months in terms of our fiscal deficit target. Generally, the average for the last 20 years has been 73% penetration into fiscal, 73.3% penetration for the first 7 months. So there's a lot of money, government spending, which is expected. So government spending is a lead indicator to rural spending. So I personally think infrastructure spending gives you the largest multiplier in terms of rural demand. So I personally think that will show up beautifully, if not in this quarter. Of course, unlikely that it will show up in this quarter, but I think the subsequent 3 quarters are going to be getting that little fillip from this spending. And I think it's a structural change in terms of rural spending, which you will see in the next 1, 2, 3 years. So I'm very bullish on the sector, consumer staples largely. And I'm not so bullish on this quarter result, but I think there is going to be, this story is playing out in Insti's mind already. So I would not be surprised even on a subdued result if the stock's price start moving up, because there are a lot of institutional counters, institutional desks which are buying these counters already in the hope of the rural spending uptake.
But, I want to get a view from Feroze on this, because you see, in the last few days especially, a lot of counters running up on deal news. Sometimes it's MOUs, which frankly is an intent, or, not really a fixed deal inked yet. What do you make of the responses you see to this, or are we just seeing reasons to put in money in a buoyant market?
Yes, I think the latter is so true, Tamanna. People are looking for opportunities, and there's lack of opportunities. You see, about as of yesterday, I think there are 37 companies in NSE 500 greater than 100 PE, almost 180 of them greater than 50 PE. So there is going to be a dearth of ideas where you have hope to make double-digit or even 15-20% compounded return. So I think anytime you see some ray of hope in terms of some trajectory change in terms of PAT, that gets lapped up. Second, as you rightly said, there's a lot of money which is chasing it. And I think I am not too worried about the broader about the full market till the mid caps and small caps outperform the large caps. So this is also a great lead indicator during reversals, especially on the lower side. If the markets are going one way, which they have over the last couple of months, from October 26, which was the expiry 18,850 to almost about 2,000 points now, what I would be very worried is, because there is some degree of sharp movements. If there are backward movements, then there could also be 1,000-point movement downwards. So what happens is, before that begins in a very, very sharp way, small caps and the broader market start underperforming. What you see today is also mid cap and small cap outperforming by about 30 bips. The large cap counterparts. As long as that is happening, a big reversal in Nifty doesn't exist. So for a trader, I'm sure he's looking at every 30, 40, 50 points of Nifty. For an investor, he does not want to give away 2-3% or even 5%. So I think that's a good lead indicator. If you look at the correlations of the past, or almost about 18 years I tested, the correlations are very, 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 very significant hypothetically. If you run a hypothesis, the p-values are very, very strong. So I would look at that as the lead indicator to any major reversals in the market, because it proves more often correct than not.
Thank you, Feroze. Great having both of you today to share your views on the markets.